Today we're taking another look at the NEAR protocol, NEAR token, performing some technical analysis and making some predictions on where we can expect to see NEAR go in the near future. Let's get into it. Welcome into the NEAR chart, guys. If you're looking to buy NEAR or want some free Bitcoin, there are a couple of links down in the description of today's video, but this is probably the only chart that I'm seeing at this point in time which is looking bullish. A lot of the other charts at the moment aren't, and all the videos I've uploaded today are looking bearish. So it's really interesting to see that something like NEAR is not acting in the same manner. First thing I can see is we've got, I suppose, a nice little uptrend here, support points moving forward. So as you can see, push that one out. That is, I suppose, the major point that we need to stay above to make sure a trend reversal does not occur. Next, where is, I suppose, a major point of resistance for us? Well, I'd suggest it's actually a horizontal point up here. As you can see, it has tried to get past this point on many occasions, and what you can see is a bullish pattern is forming itself right now. In fact, if we take a line from the bottom here, we can see that it is a flag pattern which is forming at this point in time. So all in all, looking really good right now. We are moving in a bullish manner. We're seeing higher lows, but we're not seeing the high highs yet, obviously, because we need to break out past this point. But it is coming to the point where it looks like, if I just start to extend this out, we will be within the next few weeks potentially breaking out. And based on that, it is probably one of the most bullish looking charts for us when we're looking at any cryptos at the moment. As well, one thing I'd like to touch on, 20-day moving average crossed above the 50-day moving average, which has really driven, I suppose, this move. You can see most days are green days. The red days that we have had do not compare to the green days at all, and we are still staying relatively within the framework of this flag pattern. So I'd suggest, though, over here you can see 19th of January, 20th of January, something will have happened with NEAR by that point. It was looking like it is going to be, I'd suggest, a break in an upwards direction just based on this trend moving upwards like that. Overall, looking really good. Let's have a look at a few more indicators as well. RSI, let's bring that one out. You can see that this one did get into the overbought range, and that's why we have started to consolidate sideways as opposed to keep moving upwards. RSI now sitting at 59.86. Still, I'd suggest relatively high, but it is moving below, I suppose, the 70 cent mark, so the 70 point mark, I should say. So that's overall looking relatively good. Let's have a look at the MACD as well. And what you can see is, unfortunately, it does appear that the 12-day EMA is about to cross below the 26-day EMA. And what does that signal? Well, this is probably the first bearish signal that we have seen on this chart. Basically, this is, I'd suggest, one of the most reliable indicators for a change in pattern to occur. For example, if you look at the cross back here on the 8th of December, 12-day EMA crosses back above the 26th. That is the start of our uptrend over here. Same thing happens again. We have a negative cross. We start moving downwards. It was only shallow, but then crosses back up, and then we have that big move upwards. This indicates to me that potentially there may be a dip out of this flag. Now, I think more so this isn't driven by NEAR itself. This is going to be driven by the overall state of the crypto market. So as I mentioned, this is probably the only bullish looking chart I'm seeing, but this is a bearish indicator for us. The thing with charting is you've got to take all things into consideration. So ideally, based on just looking at the chart pattern itself, we're going to break out. But based on the MACD, which I'd suggest is one of the most reliable indicators you can look at, we're going to break down. So let's have a look, I suppose, at our two different scenarios. If we break up, where are we going to go? Well, let's just get rid of this, give us a bit more room. If we break up, typically you go up the same size as your previous flag. So if you take that and we put it up all the way here, let's be a bit conservative and say, let's say we break out from, I'd suggest, about there. Where will we end up? Well, it's saying we will end up all the way here at about $23, $24. That would be the ideal case scenario for us in this point in time. Now, what is our worst case scenario? Well, it will be if the MACD proves to be right, we'll be moving in a downwards direction. We'll go straight to, I suppose, our first point of support. And I'd suggest that's probably sitting roughly about here at $12.68. If you put that in place there, you can see that, of course, we've had a little bounce there, we've had some price action here, and we've had many bounces over here as well. So I'd suggest we'd be going down to probably about that mark if we did break downwards, but we do have that 20-day moving average, of course, coming up at $13.60, which will also act as a bit of a buffer before that point is potentially hit. All in all, my price target quite simply would be to break out of this flag pattern upwards manner, continue the uptrend, and make sure that hopefully we don't break downwards. But the MACD is saying that it could be a different case. That wraps up our analysis on NEAR for today, guys. I'd love to hear your thoughts on it down in the comments section below. Of course, if you haven't done so already, hit that like button, hit that subscribe button, and make sure you turn on bell notifications for more of this sort of content. I'll leave it there for today, guys. I hope you have an awesome day. I'll see you next time. Cheers.